Today, folks, there is a record level of search traffic on Google right now for people trying to find high interest savings accounts, whether you're trying to park an emergency fund or you're an investor that's just a little skeptical of the macro environment. These are things you really need to take advantage of because it's not going to last forever. The higher interest rate environment that you can take advantage of will likely come to an end sometime next year, and that's when people are going to look for other opportunities probably in the market to make a return on their capital. Now, I'm already utilizing some of these, but we're going to take a look at the US's highest paying accounts for all the US citizens that watch this, and we're going to take a look at Canada's highest interest accounts, and then along with some ETFs and other platforms you can take advantage of that consolidate all of these together. If that is a conversation you'd appreciate, hit that like button, because as of right now, as a Canadian, I'm primarily just using Scotiabank to park my emergency fund. I always leave $10,000 laying around in my personal savings account, and right now I'm only getting about 2.65%, but there are much better opportunities that are persisting today that I'm probably going to take advantage of while I can, to be honest. But firstly, let's kind of focus on the US side of the market, because I think the problem is the mega cap banks that exist in the US, like JP Morgan, Bank of America, Citi, they're not really trying to optimize and help you out. I mean, they're not really sitting there going to give you 5% yields on your bank accounts, and they really demand really high deposits. Like, you need to put minimums in there, or you're getting monthly charges to even have the account that eat away pretty much any return you're going to get anyways. So the online platforms, the regional banks, these are the ones that are giving the best hope to most US citizens out there, with PayPal probably being one of the best and the most easy to access, currently offering 4.3% on the interest without you actually having to put minimum amounts in the account. I use PayPal, but I don't think they're offering this to Canadians. I think this is primarily for US citizens only. So something to take a look at along with SoFi. I know there's a lot of people out there that are using SoFi for debt consolidation. It's becoming a very, national recognized bank, and it's currently yielding about 4.5% with no minimum deposits. Very intriguing to take a look at some of these online platforms. There's some other ones that do offer much higher amounts, but I'm trying to throw you ones that are easier and more accessible to the average person, because most people don't want to be opening up a dozen different accounts, and most people probably already have a SoFi or a PayPal account. But there is a company called Raise in here. It's called Cloudbank 24/7. They have no fees, $1 minimum deposits, and you can get up to 5.26% right now, which is absolutely astounding. So these are things that you can take advantage of if you want to put a little bit more work into it. And because most of you probably aren't like me, I'm managing like every bank in Canada right now, so I have opportunities to take easy advantage, but it's not fun having to open up new accounts, move money around, lose track, make passwords. And I'm going to show you how to consolidate this as a US and a Canadian in a very quick moment here. But first, let's talk about Canada's promotions right now, because Scotiabank is offering one of the highest yields right now at 5.4%, but unlike PayPal, unlike, SoFi, these aren't everlasting. These are just promotional periods that only last for 3 to 4 months, and 5.4% is nice, but like you've seen in my account, they really only offer 1.4% on a regular interest rate. Then they have premium periods. You leave it in the bank for a year, you get 1.25 on top of the 1.4, and then if you really take on the new promotion, you open up a new account, then you're getting the 5% as they tap on an extra 3%, which, let's be real, is quite a bit of a headache to tap into a 5% yield, and that's what most of the banks are doing. I like Scotiabank a lot because the minimum deposit on an account is only $3,000, whereas BMO right now is offering 5.25%, and this is for 4 months, but again, the problem is you need a minimum $6,000 to avoid any of the transactional fees or the monthly account fees, which really just, again, eat away at that interest rate. Look at CIBC right now, right? 5.6% being probably the highest of the bunch. I mean, that's pretty astounding, but again, only on a 4-month period. So these are kind of the 3 major banks in Canada I'd be looking at. If you already have access to them, what you can do is go talk to the bank and try and get access to these promotions while they last, and they tend to last into the end of the year, so you need to take advantage of them right now, in my opinion, right? But let's say you don't want to be me. You don't want to be running around opening up all these new accounts, managing all these passwords. But what you can do is take your regular investment brokerage account and invest into an ETF that actually consolidates the best promotions into one monthly payment for you, and that way there's no lockup period, there's no penalties for pulling, there's no minimums you have to put in. It's very intriguing, to say the least. And also a really intriguing aspect is this isn't really available in the US. I've noticed there's no real high interest savings account ETF in the US, unless I haven't been able to find it. Maybe you have, let me know in the comment section below. But I'm going to show you how, as a US citizen, you can take advantage of the Canadian banks and get monthly US income from Canadian banks. So firstly, these are the ones that I've been able to find through a few forums here, and a lot of these all pretty much contain the same kind of investments. So the one that I like is the Horizons High Interest ETF. It's called The ticker is CASH, C-A-S-H, and you can see there's no volatility risk. I mean, it's basically one of the safest investments you'll ever make, and they basically just collect the interest and then pay it out monthly. And you'll see over time, these have gone up and up and up. These are, again, much better for short-term Parker places for cash because these promotions don't persist forever. And we can see in the cash ETF, their primary holdings are National Bank, CIBC, Scotiabank, and that's about it. So you get 3 promotive exposures to those 3 big banks in Canada, right? So if you're looking for a nice yield, take a look at this because this one's paying out right now 5.39% with an expense ratio lower than basically most ETFs, most mutual funds at 0.11%. So after the expense ratio, you're really still bringing in a whopping, 5.29, 5.28%. And again, that's paid monthly, by the way, which is absolutely astounding. On the US side of the border, if you want to take advantage of this, I do like the Purpose US Cash Fund. Now, this does trade on the Canadian markets, but again, it's a good way to collect US cash as it stands in this moment. And just look at this. Ever since interest rates started going up, these payouts have gotten higher and higher and higher. This one's been around for quite a bit longer, so at least the company has been managed for a longer period of time. You're not taking like new company or ETF management risk, which is nice. But taking a look at this one, same exact holdings, National Bank, Scotiabank, and CIBC, because a lot of these banks do operate within US dollars as well, which is really, really cool, right? And this one, if we take a look at the overview, is actually yielding quite a bit more at 5.53%. Management fees a little higher, 0.15%, but still lower than most ETFs, mutual funds out there. And if you minus that off there, I mean, you're still bringing in a whopping, 5.38, almost 5.4% yields. I mean, these are absolutely incredible vehicles for people that just want to take advantage of the short-term, interest rates. If you're just waiting on some cash, if you're doing real estate deals, you need a place to put a high amount of capital, and these are probably the best things you're going to do in the midterm, right? But I'll pass that question off to you. With everything going on in the markets right now, are you taking advantage of these high interest savings accounts? I'd love to know what you think in that comment section below.